Yeah. Yeah, yeah. So, ladies and gentlemen, good day and welcome to the Union Bank of India press conference for the period ended December 31, 2025. The bank is represented by our Managing Director and CEO, Sri Ashish Pandey, Executive Directors, Sri Nitesh Ranjan, Sri Ramasubramaniam S., Sri Sanjay Rudra, and Sri Amresh Prasad. I'll now hand over to our MD and CEO, Sri Ashish Pandey, sir, for his opening remarks.
Good afternoon to all. Am I audible? Yes. Okay. So, first of all, I think in the new year, 2026, in the current financial year, we are meeting first time. So, from entire Union Bank family, my happy new year wishes to you and your family. And I first welcome all of you, the press and media officials, for this press and analyst meet for our third quarter earnings call. At the same time, today is Sankranti. Today is, we say, continuation Lohri, Pongal. So, all best wishes to you and your family on the festivities, festive season. Coming to our earnings, first of all, certainly we will come on the figure side, but before coming to, I would like to set the context on a bit on the economy. But before that, first of all, I will pay my gratitude to all the stakeholders, certainly the customer first. So until and unless the customers are there with you with a rock solid support, you cannot do anything. So the customers first, and then second is the stakeholders, which is the Government of India, the Reserve Bank regulator, other regulators, and my honorable board of the bank. So we are grateful to all of them and all the members of the board. And on one side, on the another, certainly when 15 crore sort of a customers you are catering, the important is the staff members, the unionites. So I compliment them for along with the organization and along with the customer service. So with these two words, I think I will move ahead. The first is, I would like to say something on the macro and banking sector. So certainly, as you know, 6.5% was the GDP growth the last year, and now it is expected around 7.2 to 7.4 levels. So certainly good for us. Now, if we take the economic terms, which is Goldilocks, so nothing but high growth and low inflation, it is facilitating to our country. Though geopolitical tensions and though the tariff and the other issues somewhere or the other, but then our country is resilient enough within the structures given, and the growth of the economy and the sectors within the economy are doing good. So I think in between we have seen the policy boosters from the regulator Reserve Bank of India in terms of comprehensive consolidation of various circulars. Now most of the circulars are open for the discussion, for the comments from the participants. A welcome move, and many things are heard and considered, deliberated, and I think that is the one thing. Then the 125 basis point cut since December 24 is a good boost. And the third, I would say, like the liquidity ratios, which there are CRR cut was there, which is coming into effect, is also giving push to the economy. As far as the Government of India is concerned, so many initiatives, so many reforms, but the most importantly, as you know, the GST reforms which came, I think, few months back. The government capex, which is happening, is supporting the economy, and we see the private sector as well coming into the foray, which is where we see the credit growth also coming in. Now coming to the bank, bank had a board today, and audit committee and the board, and the board has adopted the results. I will be giving you glimpse of it. But recently we have in the ease, so the second ranking bank has got, which is the ease agenda of the government of India, basically monitored by DFS, but then executed well by the IBA. So we standing strong in the ease, which is the fourth is also 2-3 days back. We had a IBA Technology Award, and our ED Saab, he was there to receive the 4 awards and Best Tech Award also. Why I am saying this is because it is also a glimpse of the bank, that which direction bank is moving upon. So I will just brief only, then I think we'll play the presentation from the CFO side. So I am coming straight away to the figures. The net profit for the quarter 3 FY26 stood, I think, just a minute. And the net profit of the bank stood at 5,017 crores total during quarter 3 FY26. The interest income of the bank stood at rupees 26,443 crores during Q3 FY26. The business growth has increased by 5.04 YOY, wherein the gross advances increased by 713 YOY, and the total deposit grew by 3.36. Bank has total business of rupees 22.39 lakh crores as on December 31, 25. Certainly you will be having questions. So actually the business which is accumulated is much more, but we have done some reshuffling of the portfolio. So certainly when you reshuffle within the portfolio, or say the water within the tank, so it will not, but then quality increases. Certainly the efficiency parameters you must be observing, which we have already uploaded in the stock exchanges, is giving a good color to the performance. Now coming to the deposit growth, is the global deposit have increased by 3.36%. The total deposit base of 12,22,856 crores as on December 31, 2025. The RAM sector has worked very well. RAM segment of the bank increased by 11.50 YOY, in which 21.67% growth is in retail, 19.75 growth in MSME is achieved on YOY basis. So reduction in NPA is a key parameter on the strength of the bank. The gross NPA is reduced by 79 bips on YOY basis to 3.06, and the net NPA reduced by 31 bips on YOY basis to 0.51. The strong capital ratios, yes, it is stood at 16.49 as on 31/12/2025. The CET1 improved from 13.59 from 31/12/24 to 13.94 as on December 25. The returns, bank return on assets and return on equity stands at 1.35, ROA stands at 1.35. Again, one of the benchmark which we were in the Union Bank of India, and 17.09 expected during quarter 3 FY. So I think we have the figures, but then probably not taking much of the time in the speaking on the various other things. I just wanted to give you the key parameters, but then we have a detailed presentation, and certainly a presentation whenever given by an organization, it gives a color of the thought process of the management. And this time you will be seeing some more slides which we have brought into. The one is the ease of doing business. So bank has started many standpoints on that. So that is also we are covering. And HR, which is very important. That is why I complimented my all unionites staff members. For certainly there are few slides on that. And we are also running a project Muskan, where we are trying to achieve more than 300 the processes improvements across. It may be more going forward. So I think that is what we have started, so that Project Muskan simply means that there should be a Muskan in the face of customers and the staff. I think that is how the name came to that project will be coming. So I request our CFO to start with the analyst this our investor presentation, and after that we will have a question answer, and it is open for all of you.
So
Is
I'll
it
now,
okay? Okay, please continue.
So I'll now move over to the investor presentation. If we move to the next slide. So this slide just gives our, pan-India presence. You can see that, we've got branches in more than 8,600 branches, more around
I think you have to
8,300.
come up. Yes.
8,300 ATMs. Employees are about 74,000. You can also see our shareholding pattern. One interesting thing is that our FI and DI shareholding has been improving. So if you look at December 2023, it was about 16%. Now it's at about 20%. If we move to the next slide, this is giving our operating performance. So deposits, like MD Sir mentioned in his presentation, 3.36% up year on year. But I think there's a story behind that. So if you look at, there's been a conscious effort to reduce our bulk deposits. So bulk deposits have gone down year on year by about 51,600 crores. So if you exclude bulk deposits, year on year, our deposits would actually be up by 10.4%, which is a good number. Advances are up by about 7.1% year on year, within which RAM is about 11.5% and large corporate and others is about 2%. Capital adequacy continues to be strong, 16.5%. CET1 also is strong at 13.9%. Asset quality continues to improve. So it was 3.85% a year ago gross net NPA. That is now down 79 bips to 3.06%. Our net NPA again has reduced from 0.82% to 0.51%, down 31 bips. And PCR is very strong at 95%, our provision coverage ratio. Operating profit for this quarter is 6,942 crores, which is up about 2% quarter on quarter. For the 9 months, we are at 20,664 crores. Our net profit is at 5,017 crores, which is 9% up year on year and 18% up quarter on quarter. Our NIM has shown an improvement, so it is now for this quarter, it's at 2.76%. Last quarter, we were at 2.67%. So you can see a 9 bips improvement in our NIM. For the 9 months, it is now at 2.72%. Credit costs, continue to decline. So they are 9 basis points. Last quarter, it was about 22 bips. ROA 1.35%, so strong. ROE also continues to be strong at 17.09%. So the next slide, which covers profitability. So you can see that the operating profit has, improved as compared to last quarter by about 128 crores, so 2% up quarter on quarter. The net profit has increased by 768 crores, so it's now at 5,017 crores, 18% up. Net interest income has shown an increase of 5.9%. So that's up by about 516 crores. You can also see an improvement in the ROA. So, the previous 2 quarters, we were at 1.11 and 1.16. Now we are at 1.35%. And ROE as well, from 15.15 and 15.08% in the previous 2 quarters, we are now at 17.09%. EPS is at 26.29%. If we move to the next slide on asset quality. So our gross NPAs, they continue to decline. Now they are at 31,121 crores, and our net NPAs are at about 5,102 crores. Gross NPAs, like we mentioned, is at now 3.06% on an earlier slide, and net NPAs at 0.51%. PCR has been maintained at 95%, so that gives us some comfort in terms of the ECL norms which will come in in 2027. Credit costs continue to decline. So now for the full year, for the 9 months that ended December 25, it's at 26 basis points. And the same period last year, it was 0.81%. Slippage ratio has also declined 0.79%. Next slide. So this is giving our diversified credit portfolio. So you can see that RAM advances continues to be an area of focus that has grown by about 11.5% year on year. Retail has increased nicely at about 21.6%. MSME is also increased at 19.7%. Agri, again, we have reversed the trend. We were showing a decline year on year, but on a quarter-on-quarter basis, we've increased 4%. If you look at the composition of our advances, it's about 52% EBLR and 38% MCLR. Large corporates is now, and others is at about 4,40,000 crores. So that also has shown an increase quarter on quarter at 4.5%. And like MD sir mentioned in his comments, we've changed the composition. So, while we've, reduced our IBPCs, it's been replaced by, other advances, which are also helping us improve our NIM. Our credit deposit ratio, domestic is at 81%. Our mix RAM and versus LC and others, it is at 57-43, but this is on the global advances. So if you look at the domestic advances, it's actually 59-41, which is what we had mentioned in the last analyst call, that we would be aiming for this kind of a number. Our retail credit bureau scores, more than 99% are 700 and above. Next slide. So this is just giving a composition of our, RAM advances. About 25% is retail, 18% is agri, and MSME is about 16%. This adds up to the 59% of domestic advances, the three of them. And when you look at the composition of retail portfolio, about 42% of our portfolio is home loans. The vehicle is about 10%, and education loans about 7%. You can see that the increase in retail is contributed to a great extent quarter on quarter by the increase in our home loans. Next slide. This gives our exposure to the various industries. Also, we've given our rating profile. So about 94% of our corporate loans are rated BBB and above. And in terms of our NBFC portfolio, 99% is A and above. Next slide. This slide gives our deposit growth. Like I mentioned on the first slide, against the 3.36% year-on-year growth, if I just look at my, excluding my bulk deposits, we would be up by about 10.4%. And quarter on quarter, if I exclude bulk deposits, we would, instead of the negative 0.9%, we would be up 2.32%. CASA is also showing a growth. So you can see that the CASA ratio is improving. 33.96, so almost 34%, which is higher than all our previous quarters mentioned on the slide. It's grown by about 20,000 crores, our CASA year on year, and about 13,000 crores quarter on quarter. LCR is being managed well. It's at about 124%, and our NSFR is at about 113%. In terms of a composition of deposits, if you look at it, what I mentioned is that there's been a conscious effort to reduce our bulk deposits. So you can see that across the various quarters, there's a decline. So December 24, we were at 74.26, and now 79% of our deposits are CASA plus retail, only 21% is bulk. And that actually has helped us improve our NIMs by reducing our cost of deposits. If you move to the next slide, that's on investments. So about 77% of our portfolio is SLR, balance 23% is non-SLR. You can see our investment portfolio is broadly, in the range of the 3,50,000 to 3,25,000 to 3,50,000, broadly consistent. The next slide is on our profitability. So here we've given our profitability comparison, both year on year in terms of the December 24 versus December 25 quarter, as well as the September 25 quarter versus the December 25 quarter. The net interest income has grown by 5.8%, 5.86% quarter on quarter. So that's a very good growth that we've been able to show on the net interest income line. Our non-interest income has reduced by about 455 crores. primarily driven by a reduction in our recovery in written off by about 246 crores and a reduction in our treasury income of 172 crores. Here, I would like to mention that in the previous quarter, we had also booked the NSDL MTM. So that was roughly in the range of 580 crores. So, despite that, Treasury has, reported 901 crores. So that is good. Another feature when you look at the PNL is, for the first time in this year, we booked fee on PSLC income. So that is about 108 crores. That again is a good trend because that's something that the press and the analysts have been asking us every time we have a conversation with them every quarter, and that's something that we wanted to show some progress on that. So if you look at our operating profit, that's grown by about 2% from 6,814 crores to 6,942. There's been a reduction in provisions in the current quarter as compared to the previous quarter, and we'll cover that on the next slide. But our net profit is showing an 18% increase quarter on quarter from 4,249 crores to 5,017 crores. So if we move to the next slide, so this is showing the provisions, across various quarters, and you can see that, from 2,888 crores in December 24, we've been showing a decline. In the last 2 quarters, we also had, provision on certain standard assets, and that has declined in the current quarter. We continue to have a very healthy, credit cost as well as a provision coverage ratio. And therefore, you can see that, the provisions in the current quarter are at 1,925 crores. Next slide.
Next slide shows the key financial ratios. As mentioned by CFO and MD sir, due to reshuffling of business, the cost of deposit has come down from 5.48% to 5.31% on a quarter-on-quarter basis. Yield on advances, as mentioned earlier by CFO also, due to reduction in IBPC and deployment of those in other advances, the yield on advances has reduced to 8.34% to 8.27%. It's a lesser reduction than the cost of deposit. Yield on investment 6.76% to 6.81%, and yield of fund September 25 it was 7.14% to 7.10%. Cost of fund 4.74% in September to December it is 4.60%. And as mentioned earlier also, due to reshuffling of the business, the NIMS has improved on a quarter-on-quarter basis from 2.67% to 2.76%. Next slide, please. These are all key efficiency parameters. Cost to income ratio on a year-on-year basis, it looks higher, but on a quarter-on-quarter basis, from 50.65% to 49.95%. Earning per share due to the highest ever profit reported by the bank, it has increased from 22.27 to 26.29. Price to earning ratio, though it has come down from 6.22 to 5.85. Business per branch and business per employee are in front of you. It stood at 258.30 crore business per branch and 30.17 crore business per employee. Operating profit had stood on December 25, it is 3.20 crore per branch and 0.37 crore per employee. Book value stood at 153.78 rupees. The next slide, please. This slide shows the movement of NPA. The NPA number as of December 2025 stood at 31,121 crore with a PCR of 95.13 crore and a net NPA figure of 5,102 crore. Both improvement is visible in terms of gross and net NPA. Though there was some setback on account of recovery in TW accounts as compared to the previous quarter. Next slide, please. This slide shows the sectoral asset quality in RAM sector and large corporate and others. The retail loan portfolio has a sectoral slippages and NPA numbers in front of you. Retail loans has a delinquency of 1.09% and it's improving on a quarter-on-quarter basis. Agriculture loan has a NPA level of 8.08%. Also, it is showing a improving trend on a quarter-on-quarter basis. Likewise, MSME portfolio has a NPA level of 4.24%, and the same is also improving on a sequential basis. Large corporate has a good book, and the level of NPA is 1.28% only. Next slide, please.
Now, just one good thing on this slide is you can see also a reduction in the slip. Just previous slide is a reduction in slippages number. So there's been a conscious effort on the part of the bank to reduce, and therefore you can see that across quarters, like as compared to March quarter, June and September, we've reported slippages of only 1853, and that's actually helping us in terms of our financials.
This quarter, the slippages were under control, and credit cost, as mentioned in the earlier slides, it was only 9 basis points. This slide shows sectoral asset quality. The stress portfolio, that is SMA portfolio of the bank, sequentially, if you look at the numbers, 5,634 crore as of September 2025, which is reduced now to 4,285 crore. The restructured book behavior is also in line with whatever was visualized. Next slide, please. This slide shows the capital adequacy. As mentioned earlier also, the bank stood at a overall CRAR of 16.49%, within which the CET1 Tier 1 is 13.94 and Tier 2 is 1.43%, well above the regulatory requirement. The bank has been rated by various credit agencies, and recently S&P Global has given us a rating which is equivalent to the sovereign rating. Fitch rating is due for review and will be reviewed shortly. The bank has also a board-approved plan for raising 6,000 crore of equity and mix of bond, and the board and management will take a call at the appropriate time, as the capital adequacy position of the bank is at comfortable level, and depending upon the growth opportunity and market condition, the board will take a call at the appropriate time for raising the resources. Next slide, please. This slide shows the inclusive growth and the performance of the bank in terms of various government-sponsored schemes. Bank has been enabling providing funds to various government schemes like PM Swanidhi, Vishwakarma, PM EGP, and bank has a total PMJDY accounts, and the number of accounts and the amount is in front of you. Total PMJDY account in number of is 37 lakhs, and amount is 14,498 crores. Next slide. The bank has a robust ESG framework in place. Board approved ESG risk framework and climate risk policy is in place, where the credit facilities to renewable energy sector stood at around 35,000 crore. Various RCTs were skilled training to various rural self-employment training centers are established, where bank provides training to the rural area for the upliftment of their livelihood. Bank has various products with respect to women, specifically designed for women, and self-help group which are sanctioned by the bank are around 5,10,000, and outstanding amount is around 33,453 crore. Next slide. I would request Teli sir to take up this.
So this slide is on our human resource, and we have total more than 6,100 specialized officers in our bank, and the average age of our employees is 39 years. Bank has also undertaken various initiatives on our wellness awareness measures, and we are also introducing the number of employees who have qualifications in FRM, MBA, CA, CS, engineering are more than 31,000. Bank has also introduced various accessibility measures, including Union Access for Divyang. One of our employee, Miss Chonmin Engmo, who is assistant manager in our bank, and she is 100% visually impaired. She has successfully completed Mount Everest expedition and also completed this Elbrus in Europe, and one more expedition is she has completed. She is the first blind woman from India and fifth in the world to scale Mount Everest. She has also received national award from Honorable President of India under Sarvashrestha Divyangjan category, and she has also completed this expedition of Mount Kilimanjaro in Africa, and at present she is on her way to expedition of Mount Aconcagua in South America. One more sports achievement. We have Mr. L. Srinivas Reddy as a head coach of Indian Kabaddi youth team, and this team has won gold in Kabaddi in 3rd Asian Youth Games. He is also our employee. Miss Rituja Pisal, who is the captain of our bank's team in hockey, is also representing country in Asia Cup Women's Hockey team, and he has also participated in various international tournaments. One more, our female employee Chandana J, Women's Hockey team representing India in China. Mr. Prashant Shetty is the coach of Jemima Rodriguez, who was the Indian women's cricket team who had won this Cricket Women's World Cup recently. And in next slide, please. In pursuit of this building future-ready workforce, we have also made tie-up with MDI Gurgaon, IIM Indore, and ISB Hyderabad. We are also developed this leadership development program as Ascend and Mid-Career Leadership Development Program, and Banking Excellence through AI-focused programs. Diversity and inclusion were prioritized through various initiatives like Wing 1.0 and Wing 2.0, fostering our women leadership and creating pathway for gender equity. Thank you.
Next slide.
Yeah. Good afternoon, sirs. Good afternoon, madam.
Hey, Kabir ji, head of strategy.
Okay.
Yeah.
As our MD and Shiro sir already touched upon this, Project Muskaan. Our bank has undertaken a strategic initiative, Project Muskaan, to enhance ease of doing business through a bottoms-up approach. As part of the initiative, the bank is comprehensively reviewing and streamlining the internal systems and processes. The most important aim of the initiative is strengthening our service delivery standard, ensuring timely and efficient customer service, and spreading smiles to ones and all. The most important goal is that happy staff and satisfied customer.
Our CTO, Tata ji.
Yeah, thank you. Good afternoon, sirs. Good afternoon, madam. Like our MD and CEO sir has already informed, in the recently concluded IBA Technology Awards, our bank has got the best technology bank for the year. Just I wanted to inform all of you. And regarding the digital initiatives, our bank has got the state-of-art omni-channel digital business platform with multiple channels. It may be a street portal, a retail mobile banking app, business app. We have got the multiple digital journeys end-to-end automated. We have got the nearly 56 digital journeys. In the last quarter, we have got 6 new digital journeys. They are the Tarun Plus, Re-KYC, bulk payment, QR code, MPOS, etc. We have got the multiple fintech collaboration with the multiple fintech partners. And we have got a good presence in the retail CBDC as well as the wholesale CBDC, as well as in the retail CBDC programmability. We have actively participated in the Mission Kiwi project of the Uttarakhand government. Go to the next slide. Yeah. Recently, we have launched our new mobile app, Union Ease app, in the last quarter, more than 56 lakh new users are onboarded. It has got more than 400 features. Regarding the business, we have got nearly 25,000 crores business generated from the digital platforms, and 8.69 lakh accounts are opened or renewed, sir. Regarding the liability side, sir, nearly 80% of the new accounts are opened through the digital platform. Number of accounts are at 7,14,000. 47 crores plus of the business is generated from our mutual fund and insurance sides. Yeah.
Next slide. Siddharth.
Yeah. Good afternoon,
Thank
everyone. In line with the initiatives that the bank has taken to strengthen its digital capabilities, a natural step that the bank has considered is setting up a dedicated team for driving digital business. What it really will enable the bank to do is complement the efforts of the branch, meaning generate additional business over and above the kind of business that we see happening through our field units. This will be leveraging the existing capabilities that have been built for driving hyper-personalization through our customer data platform that is established as part of our digital project. The analytics capabilities that the bank has built. All of that put together will enable us to reach out to more customers who prefer the digital channel. As the day changes, we are seeing more and more digital adoption by customers. So in order to be able to cater to them, we will be driving initiatives that will basically convert the bank, which is currently like a digitally enabled setup, to becoming a digitally driven entity. So objective of doing that and the outcomes that we anticipate are obviously improved top line, additional top line coming in, which is currently in one sense remaining untapped. Better customer experience as well as a better connect and brand for the customers to interact with. Thank you.
Our Chief Compliance Officer, Samalji.
Yeah, thank you. Bank has been taking a lot of measures or initiatives in terms of improving its risk management, compliance as well as assurance standards. In fact, our MD and CEO sir's leadership, who has given a new call that business first and compliance always. So the bank remains not only does good growth in terms of business, but also banks remains compliant with respect to all its regulatory standards and remains resilient in terms of any kind of future, adverse scenarios. So bank has so far what we have done is we have entirely, digitized and automated the entire compliance and assurance functions in the bank so that it becomes easy for the employees to comply with relevant regulations and rules. At the same time, bank also taken, it's a unique initiative where after this DPDP Act comes into picture, bank has established a separate, vertical headed by a very senior level executive GM to take care of the customer data protection, data classification, data storage, confidentiality, consent management, everything, so that we remain very compliant to the Digital Data Protection Act. Also, banks, relationship management in terms of dealing with the customers, dealing their grievances, etc. Bank has totally made it, end-to-end. We call it the CRM Edge system, wherein the bank takes care on time basis the customers' grievances, their queries, everything. In fact, this has been appreciated recently by the Government of India, where the government has acknowledged the good work done by the bank in terms of handling customers' grievances and complaints in time. That's the best thing we are doing. At the same time, we are also strengthening our risk, enterprise risk management structure. We are the one of the first bank in India to achieve this ISO 13000:2018 assurance standards in terms of risk management, and also strengthening at the same time our cyber security and cyber resilience standards and everything. So that we are taking a lot of initiatives in terms of risk and governance standards. So thank you.
Tata ji.
Yeah. Next slide. Yeah, thank you. Regarding the digital footprints, we have given the data both on the number of users as well as the volume of the transactions. We can see in each and every field we have got a upward trend. Net banking users, we have touched 91 lakhs. Net banking corporate users, it is at 5.64 crores. Debit card users, very positive growth, 5 crores 76 lakh users are there. In the volume of transactions, you can see mobile banking and UPI, we have crossed 36 crores transactions. Net banking, there is a growth, of 1.11 crores. Similarly, credit card also number of transactions has given a very positive growth, which is at 72.4 lakh for the December quarter. Thank you.
Next slide, Asiso Kurilji.
Thank you. Digital transformation being a key business strategy for the bank has given equal importance to the cyber security also. Cyber securities continue to be governed by a robust board-approved framework, ensuring the regulatory compliance and effective oversight. Bank has undertaken large-scale cyber awareness initiative covering the senior citizens, college students, school children, reinforcing the safe digital banking practices and fraud prevention. Bank has also undertaken a technology upgradation of its cyber operation center with the newest technology to improve the real-time monitoring, threat detection, incident response, thereby strengthening the cyber resilience. One of the most important initiative again bank has taken in terms of a setting up of cyber security center of excellence. The aim of this center is to develop an in-house capability on the key technology strength like a VAPT, ethical hacking, red teaming, blue teaming, so that bank remain always ahead of what hackers are doing it. Bank is also experimenting with the various technology like AI, Gen AI. So that is the aim of this center is. In terms of the initiative which has been taken by the bank, obviously bank has got an external recognition through various awards. Some of the awards like we got recently the DSA Excellence Award in Cyber Security. Similarly, we are also recognized as one of the best team in terms of advanced cyber security management team. So that is also being done by the bank. And cyber security is one of the most important aspect for the bank, and that's why bank is continue to invest in the cyber security infrastructure. Thank you.
Next slide just shows the subsidiaries and JVs of the bank. So we've got 5 subsidiaries, 2 JVs, 1 associate, no change. Next slide. Just shows the awards that the bank has been winning. So these are the awards that we've recently won in various areas, MSME, HR, IT, etc. So that brings us to the end of the presentation that we have. It's been a long one, but we thought it was very important to just give you a perspective of what the bank is up to. We now open it up for Q&A.
Thank you, Union Bank of India management. So you've hinted upon the HR practices, and we've heard in detail just right now. I'd like to draw your attention to Honorable Finance Minister's comments recently, where she mentioned PSUs can't be defended, where they talk about communicating to customers in regional languages, and that should be fastened and accelerated. I'd like to understand what is the situation like at Union Bank of India in training staff in regional languages, especially regions like South and North, where staff cannot communicate in the regional languages. This is first. Second question on lending to NBFCs. How aggressive are you on this particular front? I see your share in advances to NBFCs has increased. First, these 2 questions.
Yeah, I would like to address the first one. A very good question. I compliment you, madam. Actually, if you see, the staff, so various measures which we are taking, but your question was specific to the regional languages. So actually we are following, on the 2 ways. One is I would like to say that generally we keep the staff, we have a transfer policy, and further we are also modifying further subject to approval of various authorities. So that we keep into our mind that the local people are kept mostly there. So that is point number 1. The point number 2 is bank has also gone with the local area based officers. So I think that we are, how many? 1,500. So that was actually one initiative we took, and around 1,500 people. Now, there are certain, let us understand the customer psychology. Many of the time they want to know in the local languages most of the queries. So we are also, developing the chatbot and other things in the various languages. So generally because now if you see the digital channels, I think the very huge transactions are happening in the digitally. Now in that course of action, when we are having the chatbot which is in a position to understand, the local languages, maybe the Tamil, Telugu or Malayalam or maybe the Punjabi or anything, and respond to that. We are also internally, because as you know, AI story is always there. And we already have purchased the hardware, everything is in place. We have already done POC on the 2 use cases. One of the use case which we are now trying to adopt is, can the AI understand the various languages and respond to that? So I think this is what we are also building upon, and our ED Saab is taking that project forward. So I think, and along with the team, the digital team and IT team. So these are the few initiatives we understand, and in the days to come, that is why the first point was customer first. So until unless you have a customer focused approach, centricity, probably we will not be in a position to move forward. Now coming to your second question related to the NBFC, we are very mindful of, the last 1.5 year, what are the dynamics taking care of. So if you see, we have also given a chart where what is the exposure to NBFC, and particularly in NBFC, what is the rating and which sort of an NBFC we have lent it. So basically it is mostly, I would not name it, but then it is in the AA and AAA category which we have lent it. So increase is there, but at the same time on the MFI and the other where we are seeing certain stress, we have not actually, it has degrown on that count. So we are mindful of that, and we are moving in the same direction. So generally, if you see in the presentation as well, we have tried to give you the color of the book on the asset side, on the external rating. So almost most of the part.
More than 99% of our exposures are A and above.
A and above.
Yeah,
I
and our
think
book also
that gives, and that is why when you see the SMA, it is too low, coming to 4,000 only, 4,285 actually.
Sure, sir. Thank you. Also, do you expect rate cut to happen in February? And on that note, what would be your outlook on margins? That's it.
So actually, if you ask one economist, then you go to other, and you will find different views. But then I would not go to that line of predicting that sort of. But let me tell you, when I said initially, what are the government initiatives that are taken for past so many quarters, and what is the expectation of GDP going forward. And when I said the Goldilocks, you might have heard in most of the discussions. So certainly it is a era of high growth and the low inflation, which gives a leeway of somewhere moving forward. But then it depends upon various other modalities as well. So I think it is a very well balanced approach taken by our regulator and the government. So I think that is not an issue right now, but the economy is conducive of the favorable circumstances for the various players in the industry, like even banks, and the second one I would like to say even the corporates. So the atmosphere and the platform is conducive.
So the outlook on margins. Outlook on margins. Net interest margin.
Okay. See, particularly probably many of you would like to know this. We actually worked really, I would say the entire team has worked very hard, and we tried to, though bank is very big, around more than 23 lakh crore. We have worked hard. We have actually gone specific to the granular levels to the book. I will give you only 4 pillars of it. The first, we have really shed off, certainly somebody may be asking even in the growth, then almost 40,000 crore of deposit we have shed, which was high cost. So whatsoever growth you are seeing after the shelving of 40,000, but our CASA has increased by 15,000 crores. So 1.40 percentage basis, 140 basis points increase probably is a good sign for any bank in one quarter. The second point is that, while you are going for the business, you have to be equally watchful of the, the regulatory limits and, the sense of, I would say, because there is no as such prescription, but sense of. So our CD ratio, you will see the 80 point in the range of 80, 81 point. The second is the LCR, the liquidity. So we are again comfortable, but not, we have kept it much. So it shows. Treasury book, if you will see, around 50,000 crore we have moved, we have contracted our treasury book. So 15,000 where it has moved, certainly it has moved towards my loan book. Now the third thing that, on the, while going through the presentation, my CFO was telling that around 20,000 crore, more than 20,000 crore IBPC we had. So it is now, we have shed off. So then again, with that also there is a growth. So certainly if I take 40 plus 20, and then there were some STLs at a lower rate, which we have, shifted to the longer term. Even though there is a, the reduction in the repo as 6th of December, but then our NIM has increased. So probably this was the thing last time when all of you were attending, you asked it. We were of the I should say aspiration, but probably we have met it today. So though conservatively, though very calculatively, but then we are moving in the direction what we all aspired for, and our board, what is guiding in that direction. Welcome.
Hi, sir. So what is causing the dip in provisions both on a YOY and Q-on-Q basis? And second, sir, you mentioned about the reshuffle. So what prompted this reshuffle exercise really? And if like what are the changes which are taking place exactly, especially on interest recognition or derecognition front? And under the older system, what would be the NIM numbers?
See, actually, I would not go because the figures are there since December 24. Let us take, December 24, where from there itself, when I started my address, there is a rate cut of 120 basis points, repo, from December 24 to this level. Now, at that point of time, our NIM, it is a presentation material. It was 2.91 or 92, I believe, something like that. Now today we are at 2.76. So now where is 1.25 and where is, so I think that is one color which you can always see. Now when we are saying reshuffling, it is not like, the circumstances which makes you understand, and more so the bottom line or the top line is fine. But what today matters is your efficiency. Now today at least I can tell you my 5 of the parameters which we feel today our team says, which we feel proud of. One is the first time we have crossed 10 lakh crore of advances. That is the first point. Second time 1.35 ROA was one of the best. We have immediately within 3 months we have reached it. The third thing is that the CASA 1.40%, 140 basis point increase is another. Then your return on equity, I think that is also we have inched up much better. Our book, price to book, again the book price you can say, is also has moved up. So I think these 4-5 things when I say, so certainly what we talked in the initial and what we have shown in the presentation and what is this efficiency parameter showing is only one thing, that yes, we are very, very watchful of, each and every paisa investment and where it will yield more benefit to the bank and how better it can be deployed. So I think that is the only thought process we kept it, and going forward we will be having the same sequence of thought process on the book. And see what happens, it is a big bank, you cannot overnight do everything. So it is in the process, and certainly going forward we will be addressing more of the issues. We firmly believe that efficiency matters a lot, whether efficiency in the deployment of funds because you are a custodian of public money. The second is efficiency in the your operational working. So certainly when you aspire to improve upon more than 500 hiccups or small issues in operations, and when we are thinking of Project Muskaan, when we are thinking to have a smile in the face of customer and all, certainly you will see as a result there is automatically some increase in the business, because if once you start ease of doing business, and actually that is, you see, not only in the bank but even in the country, in the economy, when so many laws are repealed, so many things, whether any regulator or any state government or any central government, so which we are doing is yielding into the better GDP growth. So I think that is what internally in the organization, the entire senior management, we are actually sitting, you can always say that very close frequencies and monitoring each of the things and moving forward. So this quarter was actually, yes, important, because then we are moved to now last quarter. So we also wanted to, reverse the trend and come back. Provisions, I think, see, already our slippages, our ratio is less, our credit cost is less, and already the provision coverage ratio is at a very good level.
95%.
Yeah, so I think we are at very comfort. And see, it is actually it is an ecosystem of 6-7 things. And our the SMA in the book of 10 lakh crore plus, the SMA to SMA is hardly 4,285 crores. So, and there are other things also, while you have to manage, where labor code is coming, you have to manage that, you have to see many other things. So you have a long way to take care of the things. So I think we are at comfortable level in those counts. So actually it is not, otherwise even if you think the profit 5017 crores, if you see the net NPA in amount is same. So actually you can also say that almost it is a nil sort of a thing. Yeah, over to you. Thank you.
Sir, I have a question. This is on your credit growth. It has been below the system level growth. Now in the previous quarter you said by March you expect to get back to the system level growth. Do you expect, is that well on track?
Yes, if you ask me, but let us understand. The system level, if you take, it is a quarter to quarter you make a growth. And then when you convert into YOY, you get exactly system level growth. Now you know that probably maybe some one reason or the other, the first 2 quarters we have not been to that. But when I said, though we have reshuffled book and some of the initial screening results are already there, what I can say is that even that if you add some 20,000 IBPC, which we have shared off, and 10,000 days contracted, and then, so that also is giving a very good color that we have actually grown. But the thing is that, yes, if you ask me, still that we are in the process of, because you cannot do such a big bank, you cannot do overnight. But thing is that, as you said, our aspiration is certainly when economy is at 6.5 and above levels, and we aspire our coming days, the GDP would be in the range of 7.2, 7.4. Certainly you expect better than that, the system level growth. So we aspire for that.
Okay. So where do you expect that growth to come from in the fourth quarter? Will retail be doing the...
Retail, I think we have given a figure is there of 21%, and the MSME RAM sector is growing very well. Actually, we were in a bit of the corporate, but then the book which I told you, it has something is replenished with the RAM and some much more than in the corporate book. So certainly, once you have rebalanced, the growth is going to happen. It will be shown in that point also. So we are actually maintaining. Generally, we say 58, 42 range and all when RAM and the corporate book. But the thing is that we are seeing as of now the profitable scenarios. So to be in the competitive market. So I think that system level growth, we are also having the aspiration, and we are moving towards it.
Okay. Did you see any takers for the trade measures that RBI had?
Yes, we already had, if I'm not wrong, we have already sanctioned. This is, you are asking that Forex. I think 500 plus already we have sanctioned, and as on date around 248 crores, sorry, 258 odd crores is been disbursed. And actually we moved forward in certain pockets where we knew. And certainly, when you know this sort of figures which you are seeing, it very clearly shows that we have moved to the customers a lot. So we actually moved to certain pockets, we sat with them, and we devised immediately, and around 258 crores of this dispensation sort of, which we have already sanctioned, disbursed.
Is there any corporate pipeline, corporate loan pipeline?
Yes, it is there.
How much could you share? How much is your?
If I am not wrong, Basakji is there.
So, madam, if you see today we have got a sanction of around 24,000 crores of sanction, which we are going to be disbursed over a period of time. So maybe these are some of the term loans would be there, which will be gradually disbursed. But we have also got a pipeline of around 45,000 crores, which are in various stages. Maybe some of them are on, at the initial stage, and some of them are, at the processing level. So position is good in terms of the proposal that we get from the field.
Yeah. Yeah, I think mic, please, to Saab.
Good afternoon, sir. This is Joel Rebello from the Economic Times. I just want to understand, so far your corporate loan book has not grown as much. I don't know. I think year on year, has there been a shrinkage this year on year, sir? CFO, sir?
No, it's shown an increase. It's shown an increase.
How much is it?
2% is
5% around.
So it's much below trend. That's my point. And it's been this case for a long time. So, do you think that
Joelji,
retail, sorry, I'll just complete, sir. Do you think retail will continue to be the engine of growth? Do you see with these sanctions, disbursement numbers that you'll have shared, corporate loan really picking up?
See, two things are there. One is that I already pipeline, but let me go to the data which is in the presentation. There was an IBPC of around 20,000 crores, which is now zero. Now see, within the bucket itself, if you take a water and put one more water, it will not yield anything. So this is one. Another is that we had some low yielding 10,000 approximately. So total is 30,000. If you add my corporate, already there is a growth. But if you add these, certainly you will come to know the color of the thought process which is happening in the bank. This is point number one. The point number two, what Madam asked and what my CGM, Mr. Basak, has given the bit of information, that around 24 to 26,000 crores of already disbursement has to take place. And there is a pipeline under the various stages of sanctions. So I think that itself is a good color of. So if you say the RAM sector, yes, if we all sitting here, our the aspiration is that RAM should be more percentage going forward, but at the same time we will continue to grow corporate book, and we will try to. Aspiration is generally people say somewhere 60-40 or maybe 42-58. So that is what we are looking, plus minus 2 levels, to move forward, because it doesn't happen over a night. But then this is our aspiration. We want to be within this range.
Sir, aspiration in terms of growth for corporate for the next fiscal, 2% is low. I mean, so is there double digit, or what's your aspiration in terms of growth?
See, I am not in a position to convey. If you add that 30,000, then you can have an actual growth.
See, I think.
See, now the thing is that
it's more than 9%.
Yeah, actually,
it is more than 9% actually.
Yeah.
If you add. Now the thing is that certainly if you ask the growth which we are looking at in the same range of 9 to 10%. But RAM sector we are looking so that we have a more balanced the entire loan book.
Sir, last question on capital raising. You'll have an enabling resolution. we are in the last quarter of the fiscal. Is there any plan for Tier 1, which is bonds or equity? Is there, because markets are still, I mean, there's big IPO pipeline still coming. So what's your sense?
We do have our board approved plan of 6,000 crores, within which 3 to 1. So 3,000 for, I think,
3,000
2 and Tier 1, if I'm not wrong. We have, but again, if you see the level of capital CET levels which we have and the CAR we have is a very comfortable level. And up till now, you can add the profit. And this is the last quarter. So once you move to the last quarter, I cannot right now say anything on the last quarter, but certainly I can see this 9 month. So 9 month is in figures in front of you. So as far as the growth capital is concerned, and you can see this quarter, I'll say the capital is required for the 2 reasons. One is the growth capital, and another one is the provision and the other related. So we have controlled a lot on our slippages, credit cost, and the other things. So I think we are comfortable, but then there are various avenues to raise the resources. So that actually, sometimes, you talk about infrastructure bonds. Let me put differently. You have asked me only Tier 1, Tier 2. But the thing is that then in that you do not attract first the CRR, SLR and all those things. So it depends upon the market scenario and the option available to you to raise the resources to meet your growth capital. So I think we are comfortable in that range, but we are not in as such, hurry. We want to capitalize on the given circumstances at appropriate time, come for the required thing, I think.
Hi, sir. This is Ashwin from Reuters. Couple of questions. First is on the ECL framework that RBI sort of proposed. Till 2027, you have to sort of transition to it. Any estimation that the bank has done in terms of
No, we
have estimation, and I think
we are quite comfortable.
Take all the provisions which are in the book.
Okay.
And what is the total requirement? The gap is hardly 4,600 crores.
We have actually
4,200 crores. So I think that is not an issue for it.
Okay. So you'll do that.
As far as the draft guidelines are concerned, we have calculated. Correct?
Yes. Yeah.
It is in much reachable range.
Okay. So second question, we have budget coming up in a few weeks, like couple of weeks. So any expectation in terms of reforms or anything for the banking sector from a Union Bank perspective or the larger banking sector perspective that you're looking at?
Sometimes you all ask out of syllabus question, So I am not coming to it. But yes, there are certain things, various industry. And there is a consultation approach which RBI regulator or IRDA or SAB, always you do it. Similarly, Government of India also, they have a consultation process of various industry associations and people and all. So as such, nothing is like that. But then I think everything is moving in the right sense. Anything would like to add?
Anything specific?
I think there is nothing as such, from Union Bank side, because already we are below 75. I think 74, so government holding is less. So there is nothing impending in that that is, I think, for long I have not read anything in the newspaper. Let us see how it happens. Nothing.
Okay, last 1 or 2 questions because we've completely run out of time.
No, anything, please. Yeah.
That lady has been waiting for a question. Yeah, go ahead.
So your treasury income fell by 16% quarter on quarter. So what is the outlook for Q4? And also, after the implementation of the labor code, has your operating cost or employee cost gone up?
2 things. One, you asked about the treasury. Treasury, I think, is more of a function of, rising interest rate and declining interest rate. And the way in which the SLR securities, because you're supposed to maintain the various ratios, NSFR, LCR and other ratios. And you do not have much leeway to play upon them, only between the holdings under the FETPL or maybe the HTM category or AFS category, you can play with that. So I think within that range, until unless you have a windfall. So because treasury income consists of equity, it consists of bonds and interest income, and when you capitalize upon the holding you have. So basically holding will come on the equity side. So we do have, but we have not as such, capitalized on that. But then I think there is not as such a reduction because it is a more, I think.
Yeah, actually, in the last quarter, we also had booked the MTM on NSDL because NSDL got listed. If you remove that impact, right, we are actually higher than last quarter.
The NSDL which we long back purchased, no, it is listed. It is many fold.
So 550 crores approximately is the MTM just on that. So if you remove that from the last quarter, you will see that we are higher in this quarter.
Even you see the operational, let me come back to the basics. The operational level efficiency in the treasury is whether are you increasing your forex exchange incomes and other things. So probably if you see that are all in the increasing trend on the treasury side. I think you can add upon, sir, please.
I think the numbers also reveal that in this quarter we had around 900 crore of income, and year on year if you look at last year same quarter it was 814. So YoY basis actually there is an increase, and sequential quarter from Q2 there is the reason that already has been explained, and I think we should not expect much from the treasury. Our focus more is on the core business advances growth. That's why we have also reduced the treasury book.
Hi sir, Kabir from Informis Media here. My question is, have you used up some of your excess SLR to fund credit during the quarter, and are you going to do that going forward as well? And is the strategy now to rely more on market instead of deposits to fund advances? Also, second question is, how much of the pass-through of rates has happened already on both assets and liability side, and how much more can we expect in this quarter?
See, please you can. Please.
Whatever that pass-through has already happened, and the way this rate cut is happened, that is yet to be factored. The actual benefit of that is the pass-through of we have already raised the deposits and it has been repriced in this quarter. The actual benefit will happen in this quarter only. You will see from this quarter only that the cost of deposit will also coming down.
So I think that you wanted to know from SLR side.
Yes.
See, let us understand the bank's treasury. The first is that you are required to keep the minimum ratios, LCR, NSFR, CRR, and all other, the ratios, liquidity position is sound of the bank. That is one thing. But what happened? These are also dependent upon something else. Now, if I give 100 rupees to a financial institution, the runoff factor is 100%. Now the question was, probably you have not asked, that most of the things which we have shed off is from the financial institution. Our runoff factor has actually reduced. So we are requirement of, the same bank having the same level of business will have a different LCR requirement, depending upon the composition of the deposits, composition of your business on the liability side. Now what happens that we could reduce, very thoughtfully we have reduced, so around 15,000, but not entirely from the SLR side, but from the different, wherever we thought, is the return on the investment. Let me take a word, which is not comparatively that extent. When I am having the another opportunity, we have moved it there. So around 15,000 was contracted, but at the same time, it is not at the cost of anything. So we are in the comfortable LCR, we are in the comfortable NSFR, we are in the comfortable in all the ratios and all, even the CD, LDR also, which you say sometimes, we are in the comfortable range. So certainly it is nothing like, specific to that.
So how much excess SLR do you still continue to hold?
No, still we have, because see what happens, it is a sort of a cushion to you. If you want to, sometimes you are borrower, sometimes you are a lender. So there are 2, 3, 4 ways which you know more than me, that in a treasury, how you sometimes borrow on the trips or, on the ways and means or some other things. But the thing is that whenever you have a cushion, it is a cushion, and it is always required, I believe. Now, going forward, from 1st of April, you will see on the mobile and internet banking, all those things coming in.
Right.
So what happens, in the SLR side, you cannot build overnight. So what happens that if you try to build overnight, then the portfolio is having the M duration. There are lot many things associated to it.
So you don't have a specific number for the excess SLR that the
We are
bank
having
currently holds?
3-4% generally we keep excess SLR.
3-4%.
It would be around that range only.
Okay, sir. Thank you.
You can tell.
Average it is 123. It is mentioned in the slide.
Yes.
I think somebody from this side.
So maybe just last one or two questions because we have a
Yeah,
analyst
madam,
call
one.
starting at
Yeah.
2:30.
As such, nothing. But like there is a trend of banking subsidiaries, the subsidiaries of the bank, where it is a thought process. That Canara HSBC you would have seen has been listed. So it is because it gives a more depth, more comfort to customers and all. So but it is a long-term horizon probably. But then that thing is always there. But it depends upon the duration of the business of the subsidiary and other things. So, but as such, coming to our stake, that is nothing is there as such right now.
You also have in Star Union Daiichi Life Insurance, no?
Yes.
So what are the plans there? I mean,
We are
maintain
sticking
it because
to it.
because FDI has happened, and so the foreign partner Daiichi may look at
Certainly, but then it is a long, almost I should say 16 years we are with the company. We are the founder to that, and we are the shareholder promoters. And there is a certainly very good synergy between all the three promoters. And as such, there is nothing. We all are intact, and we all are actually sticking to the shareholding.
So can you throw some light on why your bank's deposit and credit growth is, not up to the system level? System level is going at possibly close to the double digits, but you all are growing at less than double digits actually. Is it by design you all are doing this, or what exactly it is?
See, the thing is that, let me tell you one thing. A deposit for what we need. We need deposit or resources to lend it. Very simple terms in banking. Now I had we had 15,000 crore, we took it out from the treasury and put it. Now there were certain books, which is what actually we are talking right from the beginning. So around 40,000 crores of deposit, high cost, or maybe bulk deposit we should have. But at the same time, you see my CASA has increased, my retail term deposit. If you put together, I think both put together is around 17 to 18,000 crore, which we could increase. So that is one side increasing, which is giving me profitability. And the second is that I always have an option. So deposit is not an issue with the rate given in the market, which is competitive. So as of now, wherever we require, otherwise, if what exactly you said, if that would have been the issue, probably there would have been a distortion in the other ratios, which is LCR and SFAR and other liquidity ratio and even CD ratio. So everywhere it is fine. So it means that the bank already had within that resources, actually we have built the book which is more efficient. But yes, as you said, going forward, again how much is, because it is a process, it is a very bigger bank, how going forward it will be. So that will be there in the growth on both credit and deposit side.
And how sustainable is the CD ratio, 84, 85%? Is it
No,
sustainable?
ours is I think 80.91 something.
Yeah, domestic.
Domestic.
Okay. And how much of business you have done from Gift City? How much of loans you have given so far?
Gift City we do not. You can.
We don't have branch in the Gift City.
We have
foreign
London
branches. One is in Dubai and one is in Sydney. But we don't have any Gift City branch.
Subsidiary we have in London.
Yeah, and one subsidiary in London.
Okay, if no further questions, then last one then.
Sir, did you have any hiring target for FY26, and how close are you to meeting that, given we're in the last quarter of FY?
Yeah, we have already given intent to IBPS for 1500 clerks. We also have, some plans for the officers and the board approval. So actually we are in that process.
All right, sir. Also, has AI impacted your hiring plans in any way? I mean, we see a lot of foreign banks announcing layoffs. Indian banks are, however, until now, the view has been opposite. I want to know it from you as well.
See, AI will give you management by objectives, management by exceptions. But you need a smile to serve a customer. I think this is my answer.
Sure, sir. Thank you.
Okay, thank you very much, for attending, and as usual, thank you for your support. See you in the next quarter.
So thank you so much to all the officials from press and media for being along with us. And I think I would request for all of you, correct? Lunch, na?
Yeah, for lunch.
Yes. I think he has not told. Thank you so much.